Hello everybody, the S&P 500 is in striking distance from the all-time high. However, it's not going to get there unless if it does something very specific. We're going to be talking about that and a lot more on today's Stock Market Brief show. So buckle up, it's a big one today. We're going to get right into it. First and foremost, we're going to revisit the Almanac Trader chart of seasonality, and we've been discussing that typically within the 6th to 7th trading day of the month of August, when it's pre-election year, we typically see some sort of a bounce. And well, we saw some signs of that today. You can see the S&P 500 pre-election here as well in blue. Purple is its current, and you can see we came down right around where we find some sort of a bottom in the month of August, and we typically can move up through that September point. Now, if we take a look at the S&P 500 on the daily time frame, you can see that we're underneath the month-to-date and the quarter-to-date anchored VWAP. However, we are finding some support that we highlighted in a few episodes ago, and we've been kind of keeping an eye on it. Prior resistance can become support, and as you can see here, we bounce from that level. So, if you are bearish, you'd want to see price get back below that level. If you are bullish, you'd still want to see price overcome that quarter-to-date and month-to-date anchored VWAP. But I want you to pay attention to these three candlesticks right here. Why? Well, we'll discuss that in a moment. If we look at the Qs on the daily time frame, you can see that the quarter-to-date anchored VWAP is starting to decline. The month-to-date is still declining here as well. Price is still below it. However, I want you to call out these three candle bars here. The reason for it is this is known as a 3-bar bullish reversal. It's known as the morning star. It's when you have a big move to the downside, and then you get some sort of a doji or hammer candle the next day, and it's followed by some bullish price action the next. And if you take a look at these, you can see we had a big move to the downside, a little bit of a doji type candle or indecision type candle, and then we had some bullish follow through. So this is the start of a potential, I say potential because it always needs follow through, and we're going to discuss what levels to keep an eye on when we need to see, or where we need to see that follow through come through. Now, are we surprised that we're starting to see a bounce in the markets? No, because it's coming at a time where the BP NDX chart was getting oversold condition. We had discussed that. It's still in oversold condition. We discussed the S&P technology sector bullish percent index RSI is getting very much into this oversold condition. And even the BP SPX chart is now moving itself from what? That overbought that we've been talking about, and now it's coming down into around the oversold area. But that's not the only reason why we're starting to see a bounce. It could potentially also be that we reached into the lower monthly expected move. So right now, as price is pulling back, it's not doing anything that the market didn't see coming into the month of August. And right now it's the 14th, so we're practically halfway through the month here. And you can see the lower line is at 4444. We actually had a low of 4443.98. So it came within pennies, as you can see, and we started to bounce a little bit from that level. If you don't know what these expected moves are, I have a separate video. It's linked in the description. I'll talk more about that on another episode because I share them pretty much on every brief. If we take a look at the Qs, you can see we tagged the lower monthly expected move, and we started to find a little bit of support within that area, and we're still obviously just trading within the prior month trading candle. That's known as an inside trading candle, which is just what? It's just consolidation. IWM, we came down into the lower monthly expected move. We're still in the red shaded area, which marks more than 20%, right? From peak to down here, that's bear market territory. So the IWM is still in theory in bear market territory. However, we have that PPO price percent oscillator crossover, and we're still just consolidating right now, and we're holding that monthly 5 EMA. So not too bad overall. Can it break down and we could see further downside and potentially come to the quarter to date? Yeah, that's always a possibility, but that's not where it's at this particular point in time. Now, before we get into the big mega cap stocks and revisiting those, I got to shout out my patrons for supporting this channel. If you guys want to take a look into the Patreon or the Discord group, so you sign up through Patreon, you sync Discord up, and then you get access to all my content. I post nothing on Patreon. I post it all in the Discord. I don't charge an arm and a leg. I charge $9 a month. You can save more if you just pay annually, get a year. It ends up being like $90 US. And I put out a lot of content there. I do trade ideas. I should first start off by saying it's not an alert service. This is not, I'm not going to tell you when to enter, when to exit. It's not like that at all, okay? So I give a lot of different chart setups, just different trade ideas. I share my watch list, and then I started altering that a little bit, and I shared a tweet on it earlier, and I'll show you another picture of it. I give monthly, quarterly expected moves, weekly expected moves, daily expected moves for the whole host of products that are, the majority of the big index products that have daily expirations. And then zones too, which I don't even put on here, but I've been sharing those. I'll show you what those are. And then if you like some of my charts, I post my stock market indicator charts there. And then most of all, you get access to the community, some other traders that are very active in there too as well. So for example, like the watch list, this is, I've altered it a little bit to make it a little bit easier to read. It was just a list of stocks, and they were, in percent off highs. That's how I organized them to show on my watch list. But now I'm looking just to look for the very tight areas of consolidation. So this is one of the 4 pictures that I shared, and it seemed to get a pretty good reaction. So I'm going to probably just keep doing that. But this is also one that I shared on Twitter. And as you can see, like all I have is, price action that's consolidating. It's typically in bullish context. So if you're looking for charts and you like these type of setups, I look through thousands of charts weekly, and on the weekends I really hit it hard. And this is just looking for areas of consolidation, because price action, it moves between expansion and contraction. Not much there. I also share the zones. Remember, the zones I share. I track a bunch of products on the zones, and I now have it so I can visualize it a little differently. This is not like a day trade type of indicator, but it helps you from an intermarket standpoint see things from overbought and oversold conditions very quickly. So when I look at like the S&P 500, this is not updated, by the way. I have to update it. So don't look at these numbers. It doesn't really matter. This was on Friday, I believe it was, or going into today. So what you'd be looking at is like a green bar, which is typically means it's in a bullish trend based off of on-chain channel. And then you have this dot, which is the price action of the S&P 500. It can move to the lower level of the bands, the higher level of the bands, and you could see it really work from a fractal perspective, where when you see this go up here, the S&P 500, you'll typically see the VIX a lot lower here, and vice versa. Like sometimes when you see the dollar go way up to the upper edge of the bands, you might see a lot of other assets, like from the global sheet, actually go down to the lower range of their band. So it's going to be interesting. If you actually are in the community, make sure to check that out, the updated one today, because my guess is the dollar is going to be more north up towards the upper end of the range, and then you're going to see a lot of the global names up towards the lower end. I'm also thank my partner at Bookmap. I'm going to be updating you on some key levels there, and in Interactive Brokers is a big help too. This is the platform that I personally use now. I've moved everything from Webull over, so I'm no longer be trading on Webull. There was this one incident that I had, and it just irked me, and I just never wanted it to happen again, so I just moved over to them. All right, we're going to hop into the main stuff. Thanks for bearing with me on that. Okay. We're going to talk about the big mega cap names, what they're doing, okay? We're going to start with Apple. So Apple obviously broke trend. We've been watching that. We said to be careful, right? Well, it broke. Earnings came out and went down further. But as it stands right now, we're up slightly on the day. And if you really pay close attention, you see these little wedge patterns forming here, and we're starting to see that 3-bar reversal. So does Apple have it in it to potentially see a little bit more relief to come up to 185, or potentially even really try to come up to 190 and fill that gap? That's going to be one to watch. Look at Google. So this is in the, it's part of XLC, right? Communications. Google right here is flagging. This is, we shared this a couple prior videos ago, but it's still consolidating in a bullish formation right now. And if it starts breaking 132.50, maybe it has more gas in the tank. If it starts breaking down below this 127.50, maybe watch for that 50-day or potentially a gap fill, because gap fills, they can act as levels of support. And I'll show you what I mean when I bring up the chart of Meta. Now, Microsoft also, yes, it's underneath the 20 and the 50-day moving average still. We talked about it probably right around this day over here, I think it was. or maybe this day, I can't really remember, but we said this one you have to be a little bit more cautious with, because we start to see as price action goes under this, it might bounce, but it might act as a level of resistance. However, remember, markets move between expansion and contraction, and you want to wait for these really tight levels, because if you play breakouts, it offers you a very tight risk to reward. So if your stop loss is under this swing low, which is around 320, and we get a breakout, okay, then you can just update the stop under the low of each day, or however you see fit for your particular way of trading. But like I said, it's tightening up, so it's gearing up for a potential stronger move, whether that breaks 320 and we see a bigger flush, or we potentially see a little pop out, maybe to 340, or to retest these moving averages that we're currently underneath right now. Now, Amazon also, you can see right now, it's starting to break out of this little tiny flag as it stands right now. So we had a big gap up on earnings, did very well, and now we're starting to move out of this. So maybe we come strike this higher, this prior swing high right over here, or potentially even go further from that. But if we start getting back below 137.50, just keep an eye on these potential areas of prior resistance. They can become support, or even potentially the gap fills there. So this overall, these are big mega cap names, and if we see continued price action moving forward, this can help us obviously bring the S&P 500 further and closer to the all-time high. But remember, there is still one very specific thing that we're going to have to pay attention to, which we'll get into here momentarily. If we look at NVIDIA had a really huge day today, up 7%, right? We flushed out of this flag pattern, and we basically said if we get back within it, we'll see we'll see how it consolidates. But this was a big bullish engulfing candle on big volume. These aren't the ones that I typically would say go and chase. I would say if you are trying to trade this, wait for, on the smaller time frames, maybe some consolidation or an inside trading day that breaks out from the high. But this was such a strong day. I feel like we can potentially push up to the 20-day moving average if we get a little bit more continuation. And then it's right back within this kind of flag channel after this potential little fake out here as we reclaim the 50-day moving average. Also to note, Tesla was down on the day. So this is one of the big mega caps that was down, not getting much attention, but it was well off the lows, closing around the highs, still below an inclining 50-day, below a declining 20-day. However, once again, price action here is coiling up. So if these things start to break out, right, it offers up a clear risk to reward. You have a stop underneath the low here, right, where basically it's coming into this prior area, this gap fill, and gaps can potentially act as support. And this, right, it could bounce up and it could get rejected. It could go like that, and we could be like, oh, now it's a potential topping pattern. Okay, cool. But you can still see, if you're trading from an intraday perspective, potentially daily swing trade, even a move to just back to the 50-day moving average, that when we're right around 240, that's to 260, that's $20 per share. So on these type of moves, right, there's opportunities is what I'm trying to say. If you take a look at Meta was what? Coiling up. We pointed this out. It was tightening up. If it breaks out, it could be bullish. If it breaks down, wait for what? A potential gap fill. And take a look. We closed here on this day before earnings, I believe. Yeah. And you can see that's where we closed. So the full gap fill came down, boom, tagged it. And what did we do? We ripped and we closed right at around the highs. Now we're still below a 20-day moving average as it stands, and it's rather neutral, but overall, it's showing signs of support. So if we start getting back below this, start watching the 50-day as a potential level for the next level of potential support. If we get below that, just be more cautious, obviously. So some good signs coming out to start the week, and we did see a lot of zero-date trading really drive this market. So overall, when I'm showing you this, we got to talk about what specifically do we need to look for, and what specifically needs to happen for the S&P 500 to hit its all-time high. And the reason why I'm holding off is because it's nothing new that I really talk about, okay? The only way that the S&P 500 is going to reach to this all-time high is through a series of obviously higher highs and higher lows. But if you look at this purple line, that's the 5-day moving average. There is not a chance that the S&P 500 can make it all-time highs without this turning back up and starting to move in a more positive trend. Not a chance. It's impossible. It's not going to head down and all of a sudden it's going to gap up all the way to the all-time high. It's going to have to be a series of higher highs and higher lows, and where we stand right now, price action got back above it and is closing above it. And we're going to lose, obviously, data. So 1 day, 2 day, 3 day, 4 day, 5 days. So going into tomorrow, we're going to lose this data over here, and this is going to help flatten, obviously, the 5-day moving average out. Now, as the 5-day moving average moves out, that's the sign where we could potentially be in an accumulation phase. We talked about the 4 stages, right? Accumulation, markup, distribution, decline, and accumulation obviously goes back again. So right here was a decline, and we're actually, in theory, still declining. So be careful, right? This means that we could be bullish, but with some caution, all right? As we're back above it, we're bullish, but with caution. Why the caution? Because it's still declining. We're underneath the quarter to date, month to date, anchored VWAPs. And until this starts leveling itself out and showing us that it can become a potential level of support and see a series of higher highs and higher lows, that opens the door to shoot higher. Now, let's talk about our weekly expected moves, because I didn't have a video out on Friday or this weekend. 452.32. That is the weekly expected move that's based off of implied volatility. Okay, that's what the options market is pricing as far as risk this week. And we typically tag those levels, okay? And 68% of the time, we close within these levels, okay? Then the lower one is 438.98. And then we have the daily expected moves right here going into tomorrow's trading session. So if we start cracking down here, watch for this lower level at 445.40. If we start getting back above the quarter to date and month to date, I would imagine price would get a little choppy in this area, or we might see just something crazy where we gap above it, go and strike for the daily expected move. We've seen that a lot of times where price can't get above it during a cash session, so it just gaps and clears it on the next trading session. Okay, but those can be potential levels of resistance. And then right here, now if we do get up into these areas, right, obviously be careful chasing strong moves. You want to see how it consolidates and moves, and then this can start flattening out and turning back up, and that would be obviously offer up the opportunity. So in this area, you just need to be patient. Once you're, imagine just, okay, like once you broke here and you're like, all right, well, I'm just not going to trade until this starts turning back up. You would have just missed out on all this chop right here, and you'd be totally fine. And now once we start getting back above it and it starts flattening out, I'd be like, okay, maybe now I might take some shots. I'll start trading while it's above it, and then I'll have a stop. I think that maybe this might be the low. So if this is the low and we're going to go make a nice run, I'm going to have a stop here, or I'm going to have a partial stop here, a partial stop here, and then, I'll have a partial stop over here underneath the daily expected move. And you could break it up as time progresses to see if price wants to move forward. And if it stops out a partial portion of your position, but doesn't do out the main position, it might still head back up. Okay, so that's a couple ways to look at it. Now, that's a lot of bullish things going on, but we have to be aware of what's going on from an intermarket perspective. The dollar was up today, and remember, the dollar moves up. We've been seeing the S&P 500 go down, but today the dollar was up. S&P 500 was up big too, led by the megas. But what's even more interesting is when the megas led, also the 10-year yield reached another high today too. It closed at this high, which was up 0.38%, but it even broke intraday this prior high. And typically when you see strong move in yields, it actually puts pressure on growth names. So to me, you have the dollar up, the 10-year yield up, you have a lot of these mega cap names up. Just be aware of that from an intermarket perspective, because we've seen countless times where we get faked out, and you just need to be cautious. So when can you be more, I use the word cautious, when could you be more, enthusiastic? Well, we're bullish with caution. This has to start turning back up. Perhaps that means that the dollar starts pulling back a little bit. And if that happens, that's why I mentioned earlier about potential global, taking a look at the global ETFs and so forth. Or you can take a look at something like gold. Gold has been consolidating down, right? But it hasn't really broken anything crazy. It's really just tightening up here and wedging. And then you could see today, we actually have a long lower tail, and this could be a potential bottoming tail. So if we start breaking the high over here and start getting back above 1950, we might actually see a bounce back. And what you'd see here is that head and shoulders, right, still be potentially playing out, or inverse head and shoulders potentially playing out, to see gold go higher and maybe the dollar takes a break. And if that is the case and dollar takes a break, perhaps that also helps the S&P 500. Why? Well, because you could see it here. The dollar topped right here, the S&P 500 bottom there, this go down, this go up. That's how the correlation has been working and is still working to this day. We also have to note that obviously rates are still relatively high, so we're in a tightening cycle, and the yield curve remains inverted. We just look back through history, right? The great financial crisis, and then the dot-com bust where yields were being, held high, right? And this is obviously at a time with more debt, and this was actually at a more rapid rate too. And then when the yield curve started uninverting, we started to see real big cracks in the overall financial markets. Now, Jerome Powell said on the last conference that, hey, it might not be till 2025 where we start lowering rates. And if that's the case, we're going to see this flatline or potentially still lift up because inflation still remains elevated. If you look at core inflation over here, it's still, you look back left to the chart. This is, a 25-year chart. It's still high, and their goal is 2%. And they're saying that they're not going to stop. So something either has to crack and break and bring this down, or they're just going to hold rates higher. And then we just recently saw a little slight uptick there in inflation as well. We do have a lot of macro data coming out this month. Tomorrow we have 1 hour before the market opens up retail sales. We'll see how if that improves at all to really help the retail sector out. That's been, it got hurt. So we'll see here if that helps out. And then Wednesday we got building permits. We also have Fed Kashkari coming out too. He says stuff, and when he does, sometimes that can move markets. And we also have FOMC minutes on Wednesday. And then come Thursday, we got initial jobless claims in the Fed manufacturing index as well. Also to note, we have that potential change in trend did click over, right? It's been, a week now, and the market started pulling back. So what you want to see is this obviously to turn back up, parabolic start to under ticket, and then we could potentially start moving back up again, or see a potential change in trend to start moving that back up again. The NYSE summation index also clicked over, right? And we started the market pulling back here a little bit, but we were also talking about the divergence within the NYSE McClellan oscillator there too, as well as price action was moving and getting tighter and wedging. We're like, all right, be careful here because the internals are weakening, and well, it played out. The old full indicator is also a pretty decent indicator for finding potential changes in trend. And when the green line gets above the blue line, it can mark bullish trends, and when the green line gets below the blue line, it can potentially mark changes in trend as well. And this is a pretty big lagging indicator, but it's still one to watch because we're really just putting EMAs over the ratio line of the Nasdaq composite and the put to call ratio. So just be aware that this clicked over. So even if this upticks and this, we see this breakout of this kind of tight wedge, so we see a strong move up, everyone's like, woohoo, cheers. But if this starts, spreading itself out and heading lower, that could be a warning sign for us. Also to note, if we look at something like simple as the 5, 10, 20 EMAs, right? It's below the 10 and it's below the 20, and typically you want the 5 above the 10 above the 20 where you can see a steady uptrend, but we're actually below those key levels, so you want to see price get back above that 4,500 for the SPX and start to move up and have these start to all fan out again like they did right here. That's the same thing with the Nasdaq composite, but it looks a little bit weaker because the moving averages are starting to spread out and stack up against each other, where the 5 is below the 10, which is below the 20. So you really want to get back above this 14,000 for the Nasdaq composite. Another bearish thing that's been hitting Twitter is Michael Berry is showing his positions of being massively short, right? Puts. They say that it's with 1.6 billion, but I think that's a little sensationalized, obviously, because this is just the market value of it, but doesn't mean that he put in $1.6 billion short at all. So I wouldn't, when you see this type of stuff, I practically just would ignore it, but I thought it was interesting and I wanted to show you and just clarify that. When it says 1.6 billion, he ain't short necessarily, $1.6 billion, obviously, because he's using options, okay? I want to finish off with Bookmap. Bookmap is a software where you can see behind the candlestick. They offer my subscribers a discount, but I want to call out a couple levels here on ES. And I'm showing you the weekly expected moves. First and foremost, the one beneath us is still there. This thing has been here since couple of weeks now, right? So the longer it's here, it can act like a magnet and suck price in. So keep an eye on 44.05. However, something else opened up over here with over 500 contracts at around 45.87. So if price action wants to start making a move, keep an eye on 45.87 for the ES, can act as a potential level of resistance. So you just pay it. Yeah, like I said, down here is a very important level to watch. Up here is an important level to watch. And it coincides with actually the weekly expected move. So 43.86, it's just right down here. That's the implied move for the week. So if price action gets down here, it's nothing to be too concerned about. The market basically said that this is what we're projecting. But then also 45.82, which is just right around in this area too, that wouldn't shock me at all, because the market said this, come on Friday's close, what could potentially happen this week. So these are going to be some key levels to watch on ES. That's all I got for you on today's episode, everybody. See you later.